Alright guys, good morning. Sean from Max Options Trading again. Just gonna go over my square puts recap real quick to finish off the week. Called out square puts here, weeklies. It was a 0 DT, so high volatility, but it was a good setup, so I didn't want to miss out on it. Called it out at 3:43 a.m. And here's the analysis. I'm gonna play the clip here real quick. Replay button. Actually, before we get into that, just looking at the chart here on the daily, okay, we actually had two nice solid green days, okay, and pre-market we were actually gapping up along with the S&P, but if you look at the 4-hour chart here and the 1-hour chart, really pre-market we were pushing up, but we actually got rejected by the red line here, which is my 200 EMA on the hourly chart. So my entry would have been another test of this high using this as a supply zone. Okay, this is the zone where previously we had a demand, broke down, retested, and we flushed all the way down again. So using this also as a supply and the 200 EMA as a resistance area. Because if you scroll back to the past, every rejection we had at the 200 EMA, the red line, if the hourly candle closed fully below, even though like in this example we saw a small reversal, we ended up gapping down. And again, where's it last time? Here. Again, gap down, test, rejection at the 200 EMA, gap down again, and even many other times here. We break back up and we break back below the 200 EMA, huge gap down, right? So obviously it's a really strong resistance area to be using it as a puts. One thing I was worried about here was that we did have a really good accumulation in this area, and not only that, we had increasing volume. Remember, whenever stock goes up on low volume, it's normally a fake breakout and it ends up in a really harsh drop. So that's the one thing I was worried about. We were actually consolidating with increasing volume here, and the fact that we held this 52 to 53 area as a really nice support. Okay. So I was actually expecting a breakout, right? But looking at pre-market here, we were actually really overly extended, okay? And I was expecting a pullback, just a small pullback right down to about right around this area, previous breakout zone, which is going to be 56, 23, 25 area. But let's see what happens here. So I called the trade. I got in the trade at around 3:47 my time, which is going to be actually right over here, 15, 20 minutes right after the market opens. So let's play the chart here first. It's gapping up. It's pre-market. We're just chilling. Saw a huge red there. Okay. And the market opens. Okay. So as soon as market opened, we actually, was about to, or looking like we were going to break out. This is a huge wick here, but we were pushing above, looking really good. Huge green bar there. But what I was seeing was this harsh rejection below this POC. If you've been watching all my videos, you know how important POCs are, point of control. And the fact that RSL was overbought. 15-minute also on the overbought level. 3-minute also on the overbought level here. Oh, sorry. There's a little bit of lag. Okay. I'm going to keep playing it here. There you go. All right, there you go. Okay. So this candle right here was one of my first reasons for the entry. Shooting star candle, really bearish candle, and the fact that this candle had a lot of red volume here, engulfing the previous two candles. And another thing, bearish divergence. Stock is going up, okay, but look at the RSI. We're going down, okay. So my entry was if you break below these two EMAs, the 9 and the 21, blue and the purple line, that would have been my entry. And we'll play it. 348. This is pretty much my entry trigger here. As soon as we break below, got into puts there. trimmed 42% within a minute. At 4 o'clock, 100% gains, and 4:30, 190%. So as you can see here, we see the initial breakdown, push back up, retest. And what do I always say about retest? Enter at the next red candle. So red candle. That would have been also your entry number 2. And then there we are. Sold it for 190%. And if I cancel the replay, the stock actually goes all the way for 300% plus. The reason why I sold it for 200% pretty much is because it's a 0DT, so it's really, really risky. It does expire today, so I'm not going to chance holding anything longer and potentially losing my profits. Like, I'm not going to be greedy about 100% and 200%, right? And my next PT, actually, if you did end up grabbing another contracts, we actually have to go down to the weekly chart now, which will be down around $45. And as you can see, all these small bounces, these green volume bars, they're not enough to engulf the previous bigger selling volume bars. And they continuously gets eaten up by the huge red bars here.